Good afternoon, everyone. Welcome to today's webinar on corporate tax in UAE for natural persons. I hope I am audible. So we are delighted to have you all here as we explore the key topic, which plays a significant role in ensuring compliance and financial efficiency for individuals and businesses alike. This session is designed to provide clarity on corporate tax regulations, particularly how they apply to natural persons conducting business in UAE. Whether you are a freelancer, owner of a sole establishment, or small business owner, understanding this tax rule is essential for managing your financial responsibilities effectively. So, it's my pleasure to introduce our esteemed speaker, Ms. Dhanya Rejish, a Federal Tax Authority tax agent and the Director of RTS Accounting and Bookkeeping LLC. With her vast experience in corporate taxation and SME advisory, she will guide us through the key aspects of corporate tax, eligibility criteria, and tax implications for individuals operating in UAE. So this session will run for 1 hour with 45 minutes dedicated to the main discussions, following by 15 minutes question and answer session at the end. So I encourage you all to take notes and save your questions for the interactive session. Well, without further ado, let's welcome Ms. Dhanya Rejish to the session. Over to you, Ms. Dhanya.
Thank you, Nita, for the introduction. Good afternoon, everyone. I'm excited to be here with you today to discuss this important topic, which is corporate tax for natural persons in the UAE. With the introduction of corporate tax in the UAE, it's critical and crucial for the individuals to engage in the business activities to understand whether they fall under its scope. And unlike companies, as you know, individuals are taxed differently, and knowing the rules can help avoid unnecessary liabilities. So in today's session, we will cover who is a natural person and when does corporate tax applies to natural person, what is the exempt income for natural person, resident vs non-resident natural persons, then the threshold for registration, the corporate tax rate, the small business relief which is applicable to the natural persons, the deductible expenses vs non-deductible expenses, and how to compute the corporate tax, then how to deregister or what are the rules for deregistration and tax compliance requirements. So let's begin by first understanding who is a natural person. So as mentioned, a natural person means a human being of any age, and it can be a resident and a non-resident. And in case of a minors or in case of an incapacitated individuals, the tax obligations will be fulfilled by the legal representative. So when you register, you will be registering as a legal representative of the minors. So that legal representative is supposed to file the return, pay the tax on behalf of the minors. Now let's see, when does the corporate tax apply to natural person or individuals or in case of a sole establishment? So the first scenario is the business activity. So if an individual is conducting a business or a business activity in the UAE, then corporate tax apply to them. The second scenario is the permanent establishment. For example, like if an individual has a office in the UAE, mainly then in case of a non-resident, if they have an office in the UAE or if they have an agent in the UAE, then corporate tax apply to non-residents. Then state source income. So here state means the UAE. So UAE sourced incomes. So basically, like if an individual is getting an income from the UAE, either through any contracts executed in the UAE or through any interest, royalties or dividends from the UAE entities. So any income from the UAE companies, corporate tax 9% will be applicable. So in these three scenarios, a natural person, whether resident or the non-resident, will be liable to corporate tax. Let's see the definition of the business and business activities. In the previous slide, I explained to you the three scenarios where corporate tax will be applicable. So here the first definition is the business and business activity. So business means it can be a regular or ongoing or independent activities, like if you are conducting any trading or consulting, any ongoing transaction is considered as a business. Whereas the business activity means any transaction or series, so it can be a one-time transaction as a freelancer. So still it is considered as a business activity and it will come under the corporate tax. Next comes the definition of the PE, permanent establishments. So as I mentioned, if a permanent establishment means a fixed place of business or an agent in the UAE through which a non-resident conducts business. So it is not necessary that he should have a office in the UAE, in Dubai, in anywhere, in any Emirates in the UAE. If he has an agent here in the UAE who conducts the transaction for this non-resident, still he is liable to the corporate tax. Next definition is about the state sourced income, which is the income derived from the UAE. So that means income accrued in, derived from, or attributable to the UAE, including revenue from the UAE based customers, or it can be services performed in the UAE, or it can be or assets located in the UAE. So using any assets which is located in the UAE, these all come under the state source income. So if a person is doing a transaction from outside UAE through, let's say for an Amazon sale, so this customer, this person is listed in the Amazon and he is selling items from outside UAE, then this is a UAE sourced income for him. Even though he doesn't have a license in UAE, it is considered as a UAE sourced income. So he will also be liable to pay corporate tax. But as of now, it's not corporate tax. Actually, it's a withholding tax will be applicable for him. So as of now, the withholding tax is 0%, but maybe later FTA can increase can mention a percentage for them as well. So currently, the withholding tax for UAE sourced income is 0%. So let's see an example of a non-resident state-sourced income. Sophia is a marketing expert based in India, and she provides consulting services to UAE clients without a physical office in the UAE. So in this case, her UAE clients pay her directly and she earns more than 1 million from the UAE-based contracts. So in this case, even though Sophia doesn't have a UAE office, her income is considered the state source income because it is generated from the UAE clients, which is making her liable for the corporate tax in the UAE. And as I mentioned before, there is withholding tax for the UAE state sourced incomes. As of now, it's 0%. Now, let's see the factors to consider for determining if your income is related to the UAE. So if you see these three things, you can determine whether your income is related to the UAE or is it generated from the UAE. So the first point is where services provided from UAE or goods sold from UAE. If you are getting an answer yes to this question, then it's an income related to the UAE. The second point is where UAE assets used in the business. So if you're using any assets which is based out of UAE, then it is also a factor for considering for determining the income, if it's whether it's related to the UAE or not. And where business operations managed from the UAE. So for example, if you have employee to do the marketing or advertisement, so if your operations are managed from the UAE, then that is also a factor for determining if income is related to the UAE. So if the answer is yes to all these questions, then straight away it says that income is taxable in the UAE. Let's see what income is exempt for the natural persons. So there are three incomes which is exempt for the natural persons, and these incomes are not included in the turnover threshold for calculating the AED 1 million. AED 1 million is the threshold to see whether you are liable to get registered and pay the corporate tax. So when you calculate that turnover, these three incomes is not taken part of this turnover threshold. So the first one is wage. Wage means like any salary, benefit, or the compensation received from an employee in cash or kind. So if you're working somewhere as an individual, you are getting the salary, this income is not taxed, is not taken for the corporate tax turnover threshold calculation. Second one is the personal investment. So if you're getting any dividends or the capital gains from the investments which you made in any shares, stock, so if you are getting any income from these things, it will be considered as a personal investment unless you are running this without using a license. So if you are using a license and then doing a trading, then it will not be considered as an exempt income. This exempt income is only because you are conducting this without a license, which is not required because this is a personal investment. Then comes the real estate investment income. So if you have a real estate property in UAE, and if you are selling it or leasing or subleasing, it can be directly or indirectly through an agent and not through a license or not require a license. So if you have a real estate property and you are selling it, there is no corporate tax on it because that is considered as a individual income and it is exempt from the natural from the corporate tax for the natural persons. So these three incomes, basically, it's not taken into the calculation of the turnover threshold of 1 million. You might be thinking whether the director's fees are taxable. So a director, if he's receiving a fee as part of his employment, then it is totally exempt because it comes under the category of wages, which is an exempt income. Then in case of an independent directors receiving fees, then generally it's not considered as a business. So again, it is not part of the turnover, that AED 1 million turnover threshold. So it's that is also exempt. So if you are working somewhere and receiving a salary or bonus or wages, anything part of your employment is not taxed. Let's see an example here. A natural person who is an employee and a member of a board of directors. A natural person, Mr. H, worked for a company based in the UAE. Mr. H holds a senior management position in the company and plays a crucial role in its day-to-day operations. In addition to his employment responsibilities, he is also a member of the board. As an employee, Mr. H receives a market rate salary for his executive role, which is determined by his employment contract and is subject to applicable employment laws. So he basically have an employment contract and all these additional benefits is mentioned in the labor contract. So as a board member of the company, Mr. H also receives fee from the company for attending the board meetings. The salary received by Mr. H is in the nature of a wage and accordingly is not subject to corporate tax. In addition, the remuneration received by Mr. H is in their capacity as a member of the board in the circumstances as set out above would typically be considered as a wage. It will not be taken into the consideration for the turnover calculation. The key consideration for taxability of a natural persons are first one is taxable person, the second one is turnover, and the third one is exempt. So a natural person conducting a business in the UAE means straight away his income will be taxed for the corporate tax purpose, and there is a turnover threshold limit which is AED 1 million. And for the natural persons, it's not based on the financial year, it's based on the Gregorian calendar year, which is from Jan to December. So if you are a natural person, for example, if you have a sole establishment license or if you are a freelancer, whatever turnover, whatever revenue you make in this 2024, you made in the 2024 from Jan to December, if it exceeds AED 1 million, then you are supposed to get registered and file the return according to the law. So there is no exemption from that. So if your revenue exceeds, if your turnover exceeds 1 million in the Gregorian calendar year, registration is mandatory. Then exempt. So as I mentioned, wages, personal investments, and real estate investment incomes, all these three incomes are exempt from the corporate tax. So whatever you earn from these three categories, it will not come under the corporate tax calculation. Let's see the resident versus non-resident natural persons, how they are taxed. So resident person is taxable in the UAE if he conducts a business activity in the UAE. And for him, both UAE income and foreign income is also taxed. Whereas in the case of a non-resident, his income is taxable if he has a permanent establishment in the UAE. As I mentioned before, he should have an agent in the UAE or office in the UAE or a branch in the UAE. In this case, only a non-resident person income will be taxed. And either or else he should derive a state source income from the UAE. Let's see an example of resident. So Mr. Ali is a graphic designer based in Dubai and works as a freelancer. So he provides services to the UAE-based and international clients. His total annual turnover exceeds 81 million in the last Gregorian calendar year. So here the result is that Ali must register for the corporate tax and pay 0% on the first 375,000, and on the balance, which is above 375,000, he has to pay 9%. So as I mentioned before, if it exceeds the net profit or the annual income exceeds AED 375,000, then on the remaining, he has to pay a 9% corporate tax. For example, if your net profit, that is after deducting all the expenses of the business, is let's say 400,000, then up to 375,000, the tax will be 0 because it's 0%. And on the balance, which is 25,000, there will be a corporate tax of 9%, which will be AED 2,250. So this is the corporate tax this person has to pay if his net profit is 400,000. See an example of a non-resident person. So Mr. David is a software consultant based in UK, but sets up an office in the Abu Dhabi to serve the UAE clients. His UAE office qualifies as a permanent establishment, and his UAE-based annual revenue exceeds 1 million. So in this case, since he has an office in the Abu Dhabi, he must register and pay corporate tax on this annual income if it exceeds 375,000. Let's see an example for a person who is coming for a client meeting as part of his employment. A natural person, Mr. Z, employed by a foreign company based outside the UAE, visits the UAE for 5 days to meet with clients, present new products, and visit production facilities. So he's just coming for a client meeting. Mr. Z is present in the UAE in their capacity as an employee. He's not coming part of a business. He's just coming as part of an employment. So he is not conducting a business or business activity in the UAE. And therefore, Mr. Z is not considered a resident person under the corporate tax law. So if because of his visit, if he earns any revenue, I mean the company earns any revenue, this is not coming under the corporate tax because he is coming as part of his employment, not as part of the business. Then comes the double taxation agreement. So double taxation agreement means it's an international agreement signed by 2 or more countries for avoiding the double taxation. So if you are resident in 2 countries, then there will be if there is a DTA, then the corporate tax, the DTA may override the corporate tax rules. So whatever mentioned in the DTA will be considered, then only comes the corporate tax rules. And the DTA determines the tax residence and the tax liability in the UAE. And if an agreement applies, then always tax treatment may differ. Let's see the threshold for the registration. So as mentioned before, if your revenue or if your turnover exceeds 81 million in the last Gregorian calendar year, so which is 2024 from Jan to December 2024, registration with FTA for the corporate tax is mandatory. And the deadline for the registration is 31st March 2025, which is this month. By end of 31st, you are supposed to get registered, or else there will be a penalty of 10,000. So if your income exceeds AED 1 million, go for a registration now itself. Then submit the corporate tax returns. So once you are registered, then you are liable to submit a corporate tax return to the FTA, Federal Tax Authority. In case of natural person and the companies, FTA has given a 9 months grace period from the end of the financial year or the Gregorian calendar year. So in case of a natural person, the end of the financial year or the Gregorian calendar year means December, because it's Jan to December calendar year. So the end of the calendar year will be December. So from December, FTA is giving a 9 months period to file the corporate tax return, to make the payment and settle and clear everything. So if you are a registered taxable person, a natural person, then you are supposed to file the return before September 30, 2025 and make the payment. So the payment will be on first 375,000, it will be 0%, and whatever exceeding above the 375,000, it will be 9% corporate tax, and it has to be paid before September 30, 2025. So basically, you are getting 9 months time to organize everything, but now you don't have the 9 months time because we are already in March. So before September, you should prepare the accounts, make a financials, because there is an option to upload the financial statement. So at least in-house financials is required during the submission. And with this, you will have to do a calculation for the corporate tax out of the books, and then submit the corporate tax along with the financials. Let's see an example of a small workshop. So a natural person, Mr. X, on a visit visa to the UAE, sets up a small workshop to restore the antique jewelry. Working for himself, he generates a turnover of 1.7 million through selling items over several months in a Gregorian calendar year. So he earned this income by selling the items in the Gregorian, like over the several months in a Gregorian calendar year. Mr. X is considered to be a resident person as he is conducting a business or business activity in the UAE on his own account. And his turnover for the year is in excess of the AED 1 million, because he already achieved 1.7 million as a turnover. So the business activity would be subject to the corporate tax. So he's supposed to register for the corporate tax and make any payment if his annual profit, the net profit after all the deductions, exceed 375,000. So Mr. X will be a resident person for corporate tax purpose. And note that whether a natural person is resident for corporate tax purpose or not is not affected by the immigration or the work permit or the business license requirement. So if he is conducting any activity and he is earning a revenue of more than 1 million, he is supposed to get registered. Let's see an example for the investment income. So in case of an investment income, how it will be treated. So a retired natural person, Mr. D, in the UAE earns portfolio income from money invested through a UAE-based asset management company. So this is Mr. D's only source of income, and Mr. D does not require a license from a licensing authority to make their investments. So as I mentioned before, if it's a personal investment, license is not required. So if this is the case, then Mr. D's income is totally exempt because it's a personal investment income, and he does not require a license to conduct this activity. So Mr. D is not a taxable person, and the portfolio income is not subject to the corporate tax. It's purely his personal investment income. Next comes the corporate tax rates for the natural person. So there are only two rates for the corporate tax, which is 0% and 9%. And whatever portion, like 0% on the portion of taxable income not exceeding 375. So up to 375, it will be 0%. And whatever income goes beyond this 375,000, on the difference, there will be a 9% corporate tax, and it has to be paid on or before 30th September 2025. or according to this is the normal period which FTA has given. In rare cases, FTA will clearly mention the corporate tax. So once you get registered for the corporate tax, you will get a corporate tax registration certificate. In that, it will be clearly mentioned the due date for the filing and the due date for the payment. So accordingly, you will have to file and make the payment. But generally, it's September 30, 2025. Now let's see what is small business relief. So this is a relief which is given by the FTA for the SMEs and the startups to help them to adjust the account. Like if they don't have an accounting system or accountant, they can do a simplified return filing. So this is a relief basically given to the startups and the SMEs. So SBR, like small business relief, allows the qualifying business to be treated as having no taxable income. So if you are opting for the small business relief, then you will be considered as having no taxable income, even though if your profit goes above 375,000. Then the eligibility criteria for opting this relief is your revenue should be less than or equal to 3 million. So let's say in 2024, the start period is 2024. So in 2020, and basically this relief is only available for 3 years. That is first 3 years, which is 24, 25, and 26. So in 2024, if your revenue is less than 3 million, you can opt this small business relief, and you can file a simplified return, and there will be no payment for the corporate tax, even if your profit is beyond 375,000. And it applies to the current period and previous tax period. So let's say in 2026, your revenue goes beyond 3 million. Let's say it's 5 million. So if this is the case, then you cannot opt for SBR in that 2026. And even if in 2025, your revenue is more than 3 million and you are planning to opt for this relief in 2026, in this scenario, you will have to check the previous tax periods, which is 24 and 25, whether the revenue exceeded 3 million at any time. If it exceeded, even in 2026, you cannot opt for this relief. So make sure that your previous tax periods revenue does not exceed the 3 million. If it's not exceeding, then in this first 3 years, you have an option to elect for the small business relief. And the benefits of small business relief is that, as I mentioned, it will be a simplified tax compliance for small businesses, reduce the administrative burden, and ensures a business with limited income or are not heavily taxed. So basically, there will be no tax payable for such business. But here a point to note is, this is available only for the first 3 years, which is 2024, 2025, and 2026. After that, you even though your revenue is below 3 million, you will have to file a complete and proper corporate tax return. And one disadvantage if you are opting for the small business relief is that if any losses you have incurred, let's say in 2025 you have opted for a small business relief, but in 2024 you had a loss. So this loss cannot be carried forward because in 2025 you had a loss. So this loss cannot be carried forward. If you're not opting, you have an option to carry forward the losses of the previous years. So always you check before opting for this relief. If your revenue is less than 3 million and if your profit is also less than 375,000, then it's better not to opt for the small business relief. Rather go for the normal return filing so that you have an option to carry forward the losses to the future years. Now let's see an example of small business relief. A natural person, Mr. Q, based in the UAE, is self-employed and earns the following income during a calendar year. So he has income from the real estate investment, which is 2.3 million, and income derived from providing consulting services, which is 1.9 million. In this case, only the income derived from providing the consulting services, which is 1.9 million, should be taken into consideration, when calculating the threshold of turnover. The real estate investment income is not derived through a license, and it is not considered as a business or business activity, and therefore it is not included in the turnover. So only on 1.9 million he has to pay a corporate tax, and because he exceeded that 1 million threshold, he has to get registered and he has to file a corporate tax return. And he can also opt for a small business relief because his income is less than 3 million. He has only 1.9 million as a turnover in that particular calendar year. So he have an option to elect for small business relief and then file the return. So even if you are choosing the small business relief, the return filing is mandatory. And this option is only available during the filing. So when you're filing the return, there is a box to select whether you're opting for the small business relief or not. So you should get registered and then opt for it and then file the simplified corporate tax return. Let's see what are the expenses deduction rules for the natural person. So as per the FTA guidelines, the deductible expenses means the expenses which are wholly and exclusively for the business purpose. So if you are incurring a marketing expense or entertainment expenses for the staff, so it has to be incurred wholly for the business purposes. Anything out of the business will not be cannot be claimed here. And expenses not capital in nature means, for example, if you're buying a machinery or a furnitures which is categorized as a fixed asset, so those expenses cannot be treated under the net profit. So that amount cannot be deducted from your net profit because it is a fixed asset and it goes to the balance sheet. It is not a P&L item, profit and loss account item. And the depreciation, but the good thing is the depreciation on these assets can be claimed as an expense. So basically, deductible expenses mean it has to be directly related to the business and it has to be wholly and exclusively incurred for the business purpose. Let's see what are the expenses which is non-deductible. So withdrawals by a natural person from their businesses are not deductible, even if it is described as a wage or salary. So let's say a person is making withdrawals every month or frequently. This cannot be treated as a salary and this cannot be deducted as from the net profit for determining the taxable income. So basically, if you are a person with a sole establishment license, salary of the owner cannot be deducted from the taxable income. Comes the interest deduction rule for the natural person. So generally there is a interest deduction limitation rule. In this case, in case of natural person, this rule does not apply. So the rule is if you have taken a loan and the interest portion can be deducted, even though the loan cannot be deducted, the EMI cannot be deducted, sorry, the principal cannot be deducted, but the interest can be deducted from the net profit. And in that interest itself, there is a criteria, there is a condition which has to be higher of 12 million or 30% of EBITDA. So this condition is not applicable for natural person. So that means straight away, whatever interest you incur for a loan, which you have taken for the business purpose, main point to note here is it has to be taken for a business purpose, not for a personal purpose. That is not deductible. So if it is taken for a company purpose, whatever the interest be, it is deductible from your net profit, from your taxable income. Let's see computation of a corporate tax example. A natural person, Mr. O, based in the UAE, earns the following income during a Gregorian calendar year. So he earns income from annual from his employment, which is his salary, 300,000. Then bonus in accordance with again from the employment, which is 150,000. Turnover from baking and selling cakes, which is 900,000. So in this three, only the turnover from the baking and selling cakes will be considered because the first 2 points, which is the annual salary and the bonus, these two will be considered as part of the wages. So only the income derived from the sale of the baking of cakes or sale of cakes should be taken into consideration when calculating the total turnover, as the rest of the income is wage and should not be taken into account. The turnover is 900,000 and does not exceed the threshold. So here he has an income from the business which is 900,000, but it is not exceeding the 1 million turnover threshold. So he's not supposed to get registered. You don't have to go for a registration, and there is no filing requirement also. Therefore, Mr. O is not subject to corporate tax in the calendar year 2024. So in this case, there is no requirement to get registered. So calculate what is the turnover for 2024. If it's not exceeding 1 million, then don't go for the registration for 2024. But in next year, again, the same calculation you should do and see whether you are exceeding 1 million or not. If it exceeding, then in 2025, that 2026, you can do a registration for the calendar year 2025. Then comes the tax deregistration. So we have covered the registration part. Now we have to see how to deregister, or what are the requirements for the deregistration. So if a natural person ceases doing the business activity, or if he shut down his business, if he cancel, if it's a sole establishment, if he cancel the sole establishment license, in this cases, he's supposed to deregister from the FTA portal. And please note, the deregistration process is not automatic. That means once you cancel the license, your FTA portal will not automatically get cancelled. It has to be done by application, which is manual. So through the FTA portal, we have to submit an application to deregister the account. And this deregistration has to be done within 3 months. So if you stop the business in as of 31st March, if you are going to shut down, if you're canceling the license, then April, May, June, at least before June 30th, you are supposed to deregister the account, or else you will get a penalty of a certain amount, which is mentioned by the FTA, and this is for the late deregistration. So I have seen a lot of clients saying that they cancelled the license in 2025, but sorry, in 2019, but now they are getting the email from the FTA saying that there is a penalty for the deregistration. This case I'm talking about the VAT, not the corporate tax, but similarly, similar thing applies to the corporate tax as well. So if you are cancelling the license, make sure to cancel the TRN for the corporate tax as well from the FTA portal. And deregistration is not allowed if the business is still active, if he's still conducting the business, then they cannot apply for the corporate tax deregistration. So let's say in 2024, you had a revenue of 2 million and you got the registration and you filed the return. But when it comes to 2025 Gregorian calendar year, your revenue is less than 1 million. In this case, don't go for a deregistration. Just keep filing a nil return because once registered, you have to continue using that portal until you cancel the license. So if 2025, 2026, there is no revenue, still you will have to keep filing the nil return. And until they submit the pending returns, if any, or if there is any tax amount payable, FTA won't deregister the account from the FTA portal. So before deregistration, make sure that you have paid all the taxes due, all the penalties, and you have filed all the pending returns. So these are the conditions for the tax deregistration. Now let's see what is the tax compliance requirements. What all documents or what you should check for this corporate tax for a natural person. So tax period, as I mentioned, for natural person, the tax period is the Gregorian calendar year, which is from Jan to December. For all other licenses, it's based on their license issue month. But for natural person, even though if he has a sole establishment license, they have to follow a Gregorian calendar year, which is from Jan to December. So the first in 2025, we are going to file for the 2024 Gregorian calendar year. And then comes the registration. So registration, if the turnover exceeds 1 million, then it's mandatory registration, and return filing is also mandatory. So calculate what is the turnover for 2024. Make sure it's not exceeding 1 million. If it's not exceeding 1 million, then no need to register, even though if you are conducting a business or business activity in the UAE. But if it's exceeding 1 million, go for the registration. And 31st, as I mentioned, 31st March is the deadline. So before 31st March, you should get registered. The financial reporting and accounting standards. So if a person has a turnover less than or equal to 50 million, then he can follow IFRS for SMEs. But if it's a person with a turnover of more than 50 million, full IFRS has to be applied in the accounting, and audited financial statements are also mandatory. Then for a natural person, if his revenue is less than 3 million, as I mentioned before, he can opt for a small business relief. So in this case, he can use a cash basis of accounting as well. This is an option available only for the businesses with less than 3 million turnover. So no, otherwise we'll have to follow the accrual basis. So if your turnover exceeds 3 million, accrual basis is mandatory, or on application to the FTA regarding according to the some conditions, FTA can allow you using the cash basis. Otherwise, accrual basis is the general one for companies whose turnover exceeds 3 million. Then the return filing, what are the requirements for the return filing? So mandatory for all the registered natural persons. So once registered, you are mandatorily required to file the return every year, even though if your income is not exceeding 1 million in the second year, or if your profit is not exceeding 375,000. In all these cases, mandatory return filing is there for the natural persons who are registered. Then tax return must be filed within 9 months of the tax period. So if so as I mentioned, the calendar year is Jan to December. So from December, 9 months, which is September 2025. So before 30th September 2025, they are required to submit the return and pay all the, if there is any corporate tax payment, then they have to pay and close it before September 30th. Or else you will get a penalty for the late return filing and late payment as well. Then single tax return for all businesses under one registration. So let's say if a person has multiple licenses as a sole establishment or a freelance, so all his income will be combined and consolidated in return filing has to be done. So this person will only get one TRN number, should apply only for one TRN number. That also, please note this, because I have seen a lot of cases where sole establishment license, they have taken different TRN numbers, but that is not allowed by the FTA. So if you are a person with multiple sole establishment licenses, go only for one TRN number and make sure that you file a consolidated return that is combining all the incomes from these multiple licenses as one, and then file one return for this all the businesses. So to summarize, corporate tax applies only if the business turnover exceeds 1 million. If it is less than 1 million, no need to go for the registration as of now for the calendar year 2024. But in 2026, check again whether 2024 calendar year revenue exceeds 1 million or not. And wages, investments, personal investments, and real estate investment incomes are exempt. So no need to take this amount into the turnover calculation, which is that AED 1 million. So when you calculate 1 million, let's say your income from the business is 1.9 million, 900,000, but you have a wage of 2 million. Again, don't take that 2 million into this 1 million calculation. So for this 1 million calculation, only the 900,000 will be considered. If you're considering the 900,000, then you are not supposed to get registered, and there is no requirement for corporate tax return filing. Then the resident persons are taxable on all UAE business. So whatever income they make from the UAE, it comes under the corporate tax. And but for the non-residents, only the UAE sourced income will be taxed. FTA registration and tax return filing required if they are taxable. Like if a person comes under the taxable criteria, then registration and return filing is mandatory. And one more important point to note is, if you are doing any amendments to the legal documents, such as you might have renewed your Emirates ID or passport copy, or passport, you might have changed the passport, or if it's expired, you might have renewed it. And the trade license, if it's a sole establishment, you might have renewed, like you have to renew every year. So whenever you renew all these documents, and your address also, if you're changing the location of the office, if you are a person with the office, if you're changing the location, then you must report this to the FTA within 20 business days to avoid any penalties. I have seen a lot of cases where people have not updated the taxable person details, and FT has given a grace period until March 31st. But after March 31st, whoever not updated these details will get a penalty straight away from it is automated. So system will automatically calculate a penalty until you update the details in the FTA records. So whenever you renew or whenever you change any such documents, make sure that you update the FTA portal also within 20 business days.
Well, thank you, Ms. Dhanya, for the insightful and informative session on corporate tax in UAE for the natural persons. You have covered some crucial points that will surely help our participant better understand the tax frame and its implications. So now we will open the floor for our question and answer session. This is your opportunity to seek clarifications and get answers to any specific questions that you may have regarding today's discussion. Please feel free to drop your questions in the chat box under the question and answer chat. We will do our best to address as many questions as possible within the allocated time. So let's get started. Okay. There is already some questions in the chat for you, Ms. Dhanya. So let me read the first question for you. How can a sole establishment register for corporate tax?
Okay, so registration is similar to the taxable person registration. So unlike all the companies do the same way, we have even the natural person also should get registered for the corporate tax. You can log into FTA portal. So before login, you have to create an ID, log into the FTA portal, create a profile, and then start registration. So there is no difference in doing the registration for the natural person.
Okay, I believe that is clear for our participants. There's another question. Is corporate tax registration mandatory even if my taxable income is less than AED 375,000 and if I'm not registered for VAT?
Yes, the answer to this question is yes, because here the registration criteria is not the taxable income, it's the turnover. So even though if your profit is less than 375,000, if your turnover exceeds, if the revenue or if the sales exceeds 1 million, then you should get registered for the corporate tax, and VAT and CT is different. So if you are not registered for the VAT, you have to go for the corporate tax registration. So both are different. So in case of VAT, you can register only once you reach that mandatory or voluntary threshold. And here, the threshold is 1 million. So once you reach the 1 million threshold, you can go for the registration, even though if your profit is less than 375,000.
Okay, great. Okay. There's another question. That is, if a natural person's taxable income does not exceed AED 1 million, are they required to register and file a tax return?
Again, the answer to this question is yes. This is almost similar to the previous question, because here the registration criteria is not the taxable income, it's the turnover. So you are required to register if your revenue exceeds 1 million, and do the filing, submit the return filing also. Even though if your profit goes beyond 375,000, your return submission is mandatory.
Okay, great. There's one question. It's not complete, but then it is mentioned revenues or net profit. It's a question.
I think the person might have asked for the corporate tax registration. If it's for corporate tax registration, then you should check the revenue and it's not the net profit. Net profit comes only in terms of calculating the corporate tax. So if the net profit exceeds 375,000, like as I mentioned in an example, if it's 400,000 up to 375,000, it will be 0%, and on the balance 25,000, there will be a 9% corporate tax. So if she's asking for the corporate tax registration, then you have to consider the revenue and not the net profit.
Okay, great. I hope the answer is clear for the question. Well, there is some more questions. We'll make sure that we will answer all the questions as much as possible within the allocated time. Okay, the next question is, are employee bonus considered as an expense?
Yes, employee bonus is considered as an expense if it is paid as part of his employment contract. So if before we have seen in the slides, if there is an employment contract and this bonus is mentioned as an allowance in the contract, then it is deductible, and it should be a reasonable amount. That means when I say it is deductible, you cannot say, okay, then I'm paying 2 million as a bonus. There is a arm's length principle. You have to follow that, and then that amount can be deducted as an expense.
Okay, thank you, ma'am. There's one more question. What financials are required for filing corporate tax?
So basically, to file the corporate tax, you need the financials like profit and loss account and the balance sheet. So this you can prepare in-house, or you can go for an audited financials, but audited financials are not mandatory. So if you have an in-house financials, which is the profit and loss account, balance sheet, that will be enough for this corporate tax filing.
Okay. I encourage participants to drop your comments and questions. Well, there is another question. In 2024, a natural person started a new business through an LLC where he owns 100% of the capital. In bracket, they have mentioned single owner LLC. Should the natural person register for corporate tax purposes?
So the sole establishment and single owner LLC are two different concepts. So sole establishment is considered as a natural person or an individual, whereas the single owner LLC is considered as a juridical person. So if your license says single owner LLC, even though you are the only owner and 100% owner of that company, if that LLC name is mentioned, then it will be treated as a juridical person and not a natural person. So you asked me whether should the natural person register for the corporate tax. It's not a natural person. It should be registered as a legal person.
Okay, I hope it's clear for the participant. Well, there's another question. For less than 1 million income, is corporate tax required? How to get exemptions?
So there is no way to get exemption if your turnover from the business activity, not wages or personal investment or real estate investment income, if it is from the business activity or through a license, either through a license or as a freelancer, you are conducting some activity, or if you are non-resident and conducting selling something in UAE, this revenue, if it exceeds 1 million, corporate tax registration is mandatory, a return filing is mandatory. And you can deduct all the expenses, all the eligible expenses which is related to the business, and you can see whether your profit exceeds 375,000 or no. If it's not exceeding 375,000, then there won't be any corporate tax payment as such. Only thing is you have to get registered and file the return. So in this case, don't go for the small business relief. Don't elect for it, because there is no need actually if the profit is not going beyond 375,000.
Okay. We have few more questions, but we are having a limited time, so I hope we can answer the last question. You can select it as the last question. Can an owner of sole establishment pay themselves a salary and deduct it as an expense?
No, as I mentioned in my previous slides, whatever amount he withdraw as a salary or wage or as normal withdrawal for his personal purpose or whatever it is, if it's an official purpose, then for sure it will be considered as an expense. But otherwise, if it's like a personal withdrawal, it cannot be treated as a salary. And this amount, even though it is treated as a salary, this cannot be deducted from the net profit. So in short, sole establishment owner or individual, they cannot deduct the salary from the taxable income.
Okay. Well, thank you so much, Ms. Dhanya. Uh, there is some more questions, but as I mentioned previously, due to time constraints, and we have to end this session sharp by 3. So we will now conclude the Q&A session. However, if you have any further questions, please note that this recording of this session will be uploaded in our YouTube channel. You may post your questions there. So we will ensure to respond to them in the comment as well. Okay.
Yeah, I hope there are no more questions.
Yeah.
Yeah.
So okay. So as we conclude this insightful session, I would like to extend my heartfelt gratitude once again to Ms. Dhanya Rejish for sharing her valuable expertise on corporate tax for natural persons in UAE. I believe the insight have been provided to our participants will give a deeper understanding on tax obligations and compliance, equipping them with the knowledge to navigate these crucial aspects of business with confidence. Big thanks to you all for our participants for your time, engagement, and the thoughtful questions. Your active participation has truly enriched this discussion, making it an interactive and meaningful session. It's your thank you. We appreciate your enthusiasm and commitment for staying informed about corporate tax regulations. If you have further questions or inquiries, you may or the assistance if, with related to corporate tax matters, please feel free to reach to our DS accounting and bookkeeping. We are here to support you in ensuring tax compliances and financial success. You can stay updated by following our social media pages. The links has been shared in the chat. So once again, thank you for joining us today. We look forward to welcoming you all in our future sessions as well. Have a great day. Thank you once again.